So investor home purchases have declined nationwide. Today we're going to talk about why investors are less likely to purchase homes right now in this market in 2025. My name is Orlando. I'm a real estate analyst. I do this all day, every day. So I got this article pulled up here from Redfin. And look, it says investor home purchases declined slightly nationwide, dropped significantly in parts of Florida. We talked about how Florida is seeing a huge pileup, record historic pileups in homes available, and less people buying right now. Buyers are sitting on the sideline. People are not buying as much as they used to right now because, as we know, inflation, interest rates, cost of living has gone up. Cost of purchasing a house has gone up. U.S. real estate investors purchased 47,004 homes in the fourth quarter, the lowest level for that time of year since 2016. So typically in the fourth quarter, and we saw this in our buyer pool as well. People slowed down. Typically, the fourth quarter is usually like slower months, especially in East Coast areas because of snow and all those sorts of things. But it's been the lowest. It's been the slowest since 2016 of investors actually purchasing houses. That's down 3.9% from a year earlier, the biggest decline in a year. So check this graph out right here. You see, of course, we had the housing market crash was pretty abysmal, and then we rose back up. 2012, we rose back up. 2020 and 2021, this whole area right here, explosive. We all knew what was going on during that time. Then it went back down. Now look at us right here in the fourth quarter. Nothing doing. Nothing doing. This is based on Redfin analysis of county level home purchases across 39 of the most populous U.S. metropolises dating back since 2000. So they're going to go through some reasons, and I'm going to break down the reasons why as well. The one reason is that the slow housing market. Investors are buying fewer homes for the same reason as a lot of homeowners are, because home prices, high home prices, high mortgage rates, especially in, like they said, the most populous U.S. cities like Austin, LA, New York, San Antonio, Dallas, Houston, all those areas, high mortgage rates and high home prices. And we're still waiting for sellers to kind of get the memo that having high prices like this is not going to last long. Overall, pending U.S. home sales fell to their lowest level. So pending homes fell to the lowest level on record in January, aside from the start of the pandemic. Pending homes have dropped. So people actually getting through the process and being ready to purchase the house and close on the house has dropped. The second reason that they put is tepid demand. Home price growth has started to slow. Inventory has started to rise. Like I said, we've seen record numbers of houses rising in Florida. We're going to see more. Trust and believe me when I tell you this. We're going to see more home prices inventory come on the market. It's not like we're lacking inventory, but we're just going to see more of a pileup of inventory once sellers continue to get the memo that they are pretty much going to be that mortgage rates are not going to drop, and that home prices cannot continue to skyrocket because nobody's going to want to buy their home. So that makes some investors cautious about buying real estate to flip it and try to earn a profit. Rents have also plateaued after a boom in apartment construction, meaning it's less lucrative than it used to be for investors to purchase units to rent out. So rents have reached a plateau. A lot of investors are slower to buy apartments because they don't feel like they can buy the apartment, fix it up, and raise the rents anymore like they used to, or like where in previous past times. You still may be able to do that in some of the higher price markets, but you're not going to be able to do it as much as we go into more of this inventory, this pile up of inventory, and as more and more inventory comes on the market. So the third reason is economic uncertainty. Real estate investments are riskier than before with economic and political uncertainty in the air. We know tariffs and layoffs in the government are pretty hot topic right now, and it definitely is getting to talks of what we see right here: recession nerves. The transition to a new presidential administration and instabilities surrounding key economic measures like inflation, tariffs, jobs, of course, like we just talked about, have made some investors pull back on housing. They may be shifting to other investments that are more stable, view more stable like bonds. So investors are potentially looking at more so bonds instead of real estate, because every investor knows that they need to hedge. So if you're an investor, a real estate investor, you have in your mindset that I need to hedge against what economic circumstances could happen to my investment portfolio. Is this the right time right now to buy real estate? I'm always a proponent of it's always a good time to buy real estate, but I know there are some people who like to try to time when is the best time. So right now you're seeing a lot of investors go more towards bonds. I know crypto is still becoming a thing. If you're into stocks, of course, stocks as well. But a lot of real estate investors are going to look to diversify their portfolios. Typically, real estate investors are very, very heavily over leveraged in real estate. But as we see, as certain economic situations like inflation and tariffs and things like that come about, you're going to see them want to shift their focus a little bit more into other types of investments. Now, if you're not interested in those investments, this could be a good time for you to purchase property. A good time for you to actually look into buying property, because investors are still on the sideline. If you have that eye and you have more of a higher risk tolerance, definitely it could be a good time for you. And then elevated interest rates. The Fed has kept interest rates pretty high. That means mortgage rates remain high, making it more expensive for investors who are taking out a loan to buy homes. Investors are less sensitive to mortgage rates than regular home buyers, because most investors pay 65% in cash, but they're still somewhat sensitive. So, a lot of investors do pay 65% cash, and they'll probably either get a loan from, maybe a hard money loan or something like that, depending on. But even when in times like this, hard money loans can become expensive. So it just depends on what that investor is interested in. Now, in dollar terms, investors purchased $36.5 billion worth of homes in the fourth quarter. That's up 6.3% year over year, equal to the increase in home sales prices over that period. While investors' purchases are still declining, they're not falling nearly as fast as they were in late 2022. So it's not lost. It's not super, super terrible, but they're still falling nonetheless. In early 2023, at the time, rapidly rising mortgage rates were stalling home buying demand and making it more expensive to purchase. So let's look at investor share. So investor market share is down as well. So investors who are actually in the game, having most of the share of the real estate market, is going down. They're looking at more of a smaller share of total home purchase than usual. So right now, a lot of investors have not cornered the markets, or they're not as diving as deep into the markets as they were in the previous year. Again, this could be an amazing time for someone who is when there's that lives by the Warren Buffett saying of be greedy when others are fearful and fearful when others are greedy. If you're that type of investor and you can see, you can smell the blood in the water, you can see where people are missing it, definitely this could be a time for you to snatch up some good investments. So real estate investors purchased 17.1% of U.S. homes that sold in the fourth quarter, the lowest level for that time of years since 2020, and down 19% from a year earlier. So we can see these dips right here. This is what they were talking about in 2020 when it was just a huge dip. And then right now, investors are not as heavily active in the market right now. Now, let's look at Florida. Florida's investors are they said that they're pulling back the fastest. I've done a video about how Florida right now is seeing a huge turnaround in their market. If you want to go check that video out, I'll leave it'll be here, and you can go check that out. So Florida investors are pulling back fast. 3 of the 5 metros where investor purchases dropped most in the fourth quarter were in Florida. So in Florida, because there's a couple of things that are happening. Florida obviously is in one of those areas there that heavily higher insurance because of, they're close to the water. You get, a certain catastrophic and weather weather, catastrophic weather issues. I guess is how I want to say it. You see a lot of more like natural disasters and things like that that happen in Florida. You can also think about places like LA is the same way, where even just now, insurance costs is going to go through the roof for those that are in LA because of the fires that have happened. But Chicago is seeing some damage as well. Negative 23.3%. Investors are declining. Miami, Atlanta, negative 18.4%. Now Atlanta is still a great market. I look at houses a lot in Atlanta. Investors, they're kind of a little snobby. They're a little snobby. They know what they have. Like they know what they have, which sometimes can be a little annoying. And a lot of people are not as quick to sell, but home prices are still pretty inflated there. But also, I definitely see why. I just looked at a property today in Atlanta, and sellers are not as anxious to sell their properties. They're more so just like, I'll sell it if I need to, if I get the right price for it, because they know that metro area is going crazy right now. Now, investor market share dropped most in Florida too. Investor purchased 20.7% of homes that sold in Orlando in the fourth quarter, down from 26.6% a year earlier, the biggest drop of any metro. So Orlando is taking a huge hit. Investors are retreating from Florida because the outlook from earning money on real estate investments is cloudy. 6 of the top 10 metros that top Redfin's recent list of buyers markets are in Florida. So home prices in coastal Florida, especially condo prices, are dropping amid the increasing frequency and intensity of natural disasters. Like I said, you'll probably see the same thing in areas like Los Angeles and all those areas that have seen such huge natural disaster damage. Home prices are probably going to, or buyers are going to take a little bit of a step back, because it's like, man, it's such a risky play. On the other end of the spectrum, the Bay Area features heavily on the list of places where investor market share rose the most. Investors in Seattle bought 33.8% more homes than a year earlier in the fourth quarter, a bigger increase than other metro. Next come San Jose, 21.1%, Oakland, 19.4%, San Francisco. So these areas, Seattle, are booming right now for investors. They're seeing, a lot of investors are seeing seeing things really, really happen in areas like Seattle and San Jose and Oakland and San Francisco, Detroit. We've really started heavily marketing towards Detroit, because Detroit is a tricky area, because it can grow, but it can also be an area where you have to really have the vision to see where things are going and see where prices are, and make sure you're in the right areas for sure, because there are a lot of rough areas. I talked to someone, a seller, and she was just so upset because, she's out of state. If you're not close to the area, she's out of state, and she, trusted a realtor, and the realtor told her like, oh yeah, this is great. You only have to fix this and you have to fix that. She got there and the home was a complete disaster. It was in the hood. It was just in a terrible place. And she came to us like, hey, I bought this for $90. I was like, wait, what? Like, you bought this for $90 and everything else around it is selling for $15, $20, $35. There's no way that any realtor can justify. And she was a newer investor, so no, I didn't want to make her feel like, crazy or anything like that. But I could definitely tell that she was a newer investor, because that's one of the things I'm like, oh, you got to just know Detroit. And I don't live in Detroit, but I do, I've doing market analysis and constantly looking at markets all day, every day. You pretty much learn a lot of markets, and you learn that Detroit is very pocketed. You get a one street, great houses, next street, terrible houses, next street, great houses. It gets very picky. Same as in like areas like Memphis. We like to call them areas in transition, that are coming out of lower income, lower housing prices and things like that. So, but let's get back to this article and we'll wrap up. Investors purchased 8,220 condos in the fourth quarter, the lowest level for that time of year since 2012. It's down 13% from a year earlier, a much bigger decline than any other type. So let's look at this chart that they have here. Investor purchases 32,622, lowest of any in single family homes. This is real estate investor activity by property type in Q4. Let's just look at Q4. Lowest of any Q4 since 2016, 3,521. For townhouses, this was down by negative 6.1. This one was down by negative, from a year-over-year standpoint, negative 1.6. 8,220, lowest of any since 2012, negative 13%. And then multifamily was, stayed pretty much the same, or it went up a little bit, 2.9%. So multifamily, definitely investors looking more into multifamily. But investor purchase of low price homes are holding up. Now, investors are obviously purchasing more lower price homes. Investor purchase of expensive homes fell in the fourth quarter, but purchase of more affordable homes, which makes sense. It honestly just makes sense that investors are looking for more affordable homes versus going after those that are crazily priced, expensively priced. But purchase of more affordable homes held steady. Investors purchased essentially the same number of low price homes as a year earlier. As investors, every investor obviously wants to buy low and sell high. And so that's what you really, really saw throughout Q4 during that time. But I'm going to wrap up there. Let me know what you think about this. Just if you are an investor, do you feel like this is the right time for you to buy? Like, do you feel like that this is the best position to be in, where investors are standing on the sideline and you could actually jump in? Everybody is fearful right now, and you can go in and be greedy. Do you feel like that's the right time for this? Love to hear everybody's thoughts and comments. Until next time,